Hey guys, this is Enyolami and welcome you all to today's episode on futures trading. And today we'll be discussing about trading psychology. As a beginner or anyone who is just starting off with futures trading, this is the basic and this is the first thing you need to know and understand about futures trading before beginning to trade. Either you are new to futures trading, or you've heard about futures trading, or you've known some kind of couple of things about futures trading. If you are not implementing any of these um, um, points or tips now I'm about to share to you, then your trading might not be profitable. To be a profitable trader, you need to put into work some of most all of these tips. Not even some of them, you need to put to work all of these tips, and that is how you can be set off a very realistic goal for yourself when it comes to futures trading. So to start with this trading psychology, things you need to understand that will help you and that will enhance your trading um, profit maximization. We are going to be mentioning some few points which you all need to key into. You need to understand them. You need to implement them. In fact, if it requires you to watch this over and over again, then put it into study, put them into use. Note down the points, write them one accordingly. You can write them down and put them into use, so that when you make mistake on them, you'll be able to um, correct yourself. So to proceed, the first thing you need to know is know yourself before you start trading. Know yourself before you start trading. As a beginner or anyone who is just starting with futures trading, you need to understand yourself. You need to know yourself. You need to know the kind of personality you have. You need to be able to say, okay, is this futures trading meant for me? The truth is, not everybody can be a trader. You need this kind of mindset, the positive mindset that will allow you to be profitable with trading. If you're the kind of person that is always timid about pushing further, then if you lose a trade, or you do anything wrong while trading, you'll be mad at yourself, and you might not even be able to proceed with the trading. So know the kind of personality you have, know yourself, know the kind of mindset you are approaching this futures trading with. Know that, okay, is this really meant for me? Can I really stand trading futures? Can I bear the risk? Always know that trading comes with risk. So if you are the type that doesn't want to take risk, then it's part of knowing yourself. So know yourself very well, like in-depthly, before you start trading futures. Know yourself, very important. That's the number one thing. Know yourself before trading. When you know yourself, then you'll be able to approach trading with your kind of personality, with your own kind of personality. If you refuse to learn about yourself, then you might be wrong trading futures. So the next point is understand that trading requires personal approach. That is another beautiful point for you to put into implementation. Understand that trading requires personal approach. If you're using signals to trade, if you're trading with your own analysis, you're doing your technical analysis, you still have to understand that all these things require your own personal approach. It's just like giving two people or two persons the same signals. The truth is, one might be profitable and the other person might not be profitable. One might would utilize the signal very well, while the other person might even lose with the same signal. This is understanding your own personal approach. What approach are you giving to trading? How do you want to approach it? Are you the one? Are you the kind of person that would like to wait till you get to your take profit, or you would rather take a little profit and move on from that trade? Or you will be the kind of trader that will continually or consistently monitor your trade? All these things are personal approach. The fact that you are giving signals or you are trading you are trading with your own analysis still requires you to put in your own personal work. You can't learn it all. You keep learning every day. You keep developing yourself. You keep devoting your time. That is what we mean by your personal approach. You keep devoting your time to it, to the success of that trading. So if you don't want to, if you can't approach trading with your own personal ability, then you might not be profitable with it. So you need to understand that, okay, I need to put in my work, my own personal work, even while receiving signals. So the next point is be yourself. So when you are trying to be yourself, after you've known yourself, you understand that, okay, this is me, this is how I want to do this trading, this is I've put in my work, I can put in my own personal approach to this trading. Then be it. Just stick to that approach, stick to that method of yours, stick to that personality of yours. Don't try to copy anybody. You can only learn from them. You can only emulate some profitable traders that you're looking up to, but don't try to copy. Different thing is applicable to different kind of person. That is why your personality really matters when it comes to trading. Then the next point is get set up that fits your personality. We are still saying you can see how interrelated these points are. You need to be able to get set up that suits your personality. Know yourself, put in your personal approach, be yourself, then get a particular setup that fits your personality. Do you want to be taking profit in every they're taking little profits when giving signals or when you analyze your trade after doing your technical analysis, and you are able to just get a little profit and you move on? Or you want to stick and hold, or you don't even care about your trade, you can't even monitor your trade, or you just get signals and relax and no, I'm making money from this? Or you are just the kind of person that wants to multiply, you want to gamble and multiply your accounts overnight? All these things are what you need to put into consideration before trading. You need to be able to stick to one particular thing that suits your personality. So another one is know your risk tolerance. The truth is we have different capital, we have different margin we are using to trade. So if you don't know your risk tolerance, or maybe you saw a $5,000 account, trading account, or you saw a $500 trading account, and you are comparing your own $20 trading account or $50 trading account or $100 trading account to this bigger account, then you'll be making a big mistake, a very disastrous mistake, making comparison with such accounts. You need to know your risk tolerance according to your account and according to your personality. If you are the kind of person that when you lose so much, you become depressed, you become down, you are emotionally tortured or financially tortured, then you have to set your risk tolerance according to your personality, according to your trading capital. Don't copy anybody. Just be yourself. Know your risk tolerance. Another one is you have to move on from a bad day. Trading comes with risk. Trading is not always profitable. Trading cannot be always profit. You are not the only one in the market. The same way you are looking for profit is the same way other traders are looking for profit. Billions of people are trading this cryptocurrency market. So you have to put that in mind first. So when you lose a trade, when you lose it, maybe due to your maybe the signals or anything, or your own personal emotions to trade, then you should learn to move on. A lot of things constitute to being a profitable trader. Your emotions, your discipline, you need to know all of this. How to discipline yourself and move on from a bad day when trading. Another one is you need to note down your mistakes. That is part of discipline. You need to, when trying to discipline yourself, you make sure you are penning down everything. When you don't pen it down, you will still make the same mistake. So you have to note down the mistakes that you made. If you trade a particular, or if you enter a particular trade and the thing goes wrong, okay, apart from maybe the signal hits a stop loss, before hitting the stop loss, try to know that, okay, does this trade actually move in profit before hitting the stop loss, or what did I do wrong? Did I enter the trade? Did I enter the wrong entry? All of these mistakes or your own personal emotions should be put in play. You should always check your emotions when trading. Check your emotions. If you are in a bad mood, don't bother to trade. If you are not if you have the mind of gambling, you need money in haste, you want to use money for something important, then don't bother to trade, because that will make you lose that trade. So these are mistakes. If you've made this kind of mistake, you should pen it down so you don't repeat it. Then you focus on consistency. The truth is, when you are consistent, you always be profitable. In fact, if it is 1% of your margin of your trading capital you can make in a day, or 2% or 5% you can make in a day, that is a profitable trade. You just need to stick to it and be consistent with it. If you are not consistent, you gain today, you lose tomorrow, you might end up not being profitable. So guys, this is all we have about trading psychology. Hope you guys enjoyed it, and please don't forget to subscribe. See you guys next time. Bye.